literally you can study all this stuff, at home at your own time. It's a really, really, really cool product. We actually just sold out of them yesterday, so we literally had them up.
Oh, so it was launched.
Yeah, it was launched. We launched it on January 1st, and it sold out already. But it'll be back up probably in the next couple of weeks.
Oh, I didn't see. Okay, so can I put a pre-order in?
Yeah, I got you. I got you.
I'll put my order in then.
All right, guys. So it looks like we're live on YouTube now. So welcome to all of the folks out there who are signed up and registered for the Learn with B Stock Trading Challenge. Shout out to B. So my name is Francis Quay, founder of Cheat Code Algo in the Cheat Code community, and we teach all types of financial literacy. Our whole mission is to educate as many people as possible on items like stock trading, cryptocurrency, real estate, the whole 9 yards. Everything they didn't teach you in school about money is where we find ourselves committed to getting you that information. So first and foremost, I want to give a warm shout out to B. Simone for hosting this event. Shout out, B.
Trying to get off mute. Hey, y'all. Day one. Well, technically, this is our day two. We had something small yesterday with the VIPs, but everybody is in here now. Thank you guys so much for signing up. Once again, I'm B. Simone. We put this together with Cheat Code. I went to my friend and asked her if she knew anybody that could teach me about stocks. I know I need to get into the stock market and I don't know anything about it. That's why I'm just like you guys. I have my pen and paper. I'm taking notes. I'm sitting here on the couch with my puppy. Like I'm in class with y'all. I don't know much, but I did reach out to the best of the best, which is this team right here on this Zoom, Cheat Code, who is going to teach us everything from A to Z, top to bottom, in the easiest terms as possible, so we can understand and really get into the stock market and trading and all that good stuff that we hear all about on the internet and on Instagram, and we literally just scroll past it. I know I do. I'm like, I need to get into it, but I don't know nothing about it. Sometimes it's overwhelming. So this is the perfect place for us to start this journey going into the new year. So thank y'all for being here. And I would love for Cheat Code to introduce themselves too, because we did it yesterday, but once again, we have way more people in here today. So I hope you guys are excited. You guys will get the recordings. So don't get discouraged if you were a few minutes late or, one day you can't make or something like that. You will get all the recordings of every single day sent to your email, but make sure y'all take notes. And once again, like he said, Mr. Quay said, don't be scared to ask a question. Ask. We want you to get your money's worth. We want you to soak up as much knowledge as you can during this time. And I don't want you to leave being like, well, I didn't learn nothing, which is not going to happen, obviously. But I want to make sure that you guys are, retaining and comprehending the information. So ask whatever you want to ask. And thanks for being here.
Yes, ma'am. Yep. Yes, ma'am. Thank you, B. And yes, B, everybody, please go ahead and ask. We would definitely get those questions to you guys. Those in the YouTube section, we do have somebody that is going to be there to answer your questions as well. Shout out to Keo. I think that's a great way to kick it off. Keo, you want to go ahead and introduce yourself to the world?
Hello, everybody. My name is Keo. I am the community manager at Cheat Code. I just love the learning, love sharing the knowledge. So as B just said, don't feel afraid to ask any question. There is no dumb question. All questions are good questions. The only dumb question is the one that's not asked. All right. So ask your question, get it out there. Thank you for joining today.
Sir. All right, Kim.
Sorry, I was on mute. Hey, y'all. I'm so excited to be here with y'all. We are here to bring the energy and the education for you. B. Simone is all about manifestation. So for all of y'all who are like, yo, in the new year, I am not trying to spend my life working a 9 to 5. Like, I'm telling you, this information will change your life. You learn it, then you apply it. I'm going to be teaching tomorrow. I'm always here. Put your questions in the chat. Do not be afraid to ask questions. I tell you what, Keo was the most annoying when we first started asking all the questions. No, I'm just playing. But definitely we are here for you to answer all the questions. So hit us up. Let us know.
That is very true. Keo was definitely annoying. He's asked all the questions. But now he's a pro, man. Now we ask him questions. So that's how that goes. Let me see. Is Bucky you home yet? I don't know if Bucky's home yet. Bucky's
I'm
still
still
on.
I'll be there in like 2 minutes. Give me a second.
All right. We'll go ahead and get Bucky situated. So to everybody who is just joining again, this is part of our team at Cheat Code. Myself, Keo, Kim. We all have a story on how we started in stocks and trading. We went over a lot of that yesterday with in the VIP class. But just to give you guys a little bit of frame for those of you who are here on YouTube or weren't here yesterday. Our stories all are very different, right? We all come from different backgrounds. We all have different experiences. Mine started, as a teenager, 13, 14 years old, trouble kid, always in trouble, things like that. Had a whole long experience run-ins with legal and all that type of stuff. Ended up with a background at 21, at 18 to 21. Came home at 21. And literally, I tell people all the time, and I preach this gospel like you wouldn't believe, because if it was not for trading and investing, I would not have been able to go from, as of now, millions of dollars. Right now, we currently multimillionaires. Both myself, a part of Jehu, Keo's touched $1 million trading as well. Get Kim and everybody else is on their way, well on their way, right? But the point of the matter is that if it wasn't for trading and opportunities, even outside of that, outside the crazy money, just the fact that I was able to build any type of life for myself as somebody with a felony and was not, and then a child on the way, right, was not able to really find anything. I didn't have any other skill sets. I didn't have any other educational background. I didn't have any other opportunity outside of, I was in construction. I was making like $7 an hour, right, digging ditches for electrical wiring. And that was not the life I wanted. I would not have been able to make my way out of that had it not been for what I knew and what I learned, and what my dad passed on to me early on. And so my whole point in saying that is, like I said yesterday on yesterday's call, your future, your financial future, your lifestyle is a direct relationship to what it is that you put in your mind and what it is that you know. And nobody will be able to take away from you at all. And shout out to Mom Dukes for telling me that one. That's my mama's quote. But point being, that's what you guys need to focus on. And I'm glad that you guys are here because this is the first step in doing that. Keo, same thing. Keo's background is much different from mine. Kim's background is much different from mine as well. So if you guys want to add anything to that before we get started, please do so. Keo, Kim.
Kim, go ahead.
So yeah, just like he was saying, I'll keep it short. We did like an intro yesterday, but I came from a background of education. I used to be a teacher. Shout out to all you teachers out there because we got underpaid. I was an assistant principal, got my PhD, and I always thought, education is going to equal money, right? You're taught in school, man, go to school, get good grades, and then you'll come out and you'll make money. That is not how it works in the real world. We don't learn taxes. We don't learn stocks and options, not in my school. So when I came into contact with this, I was, stuck in student loan debt. Teaching is a very draining job. If you all are teachers out there, and it's one of those things that it was really just God. God brought me to the right place at the right time. I took a class with Bucky. Bucky was like, all right, y'all, cheating ass, like we gonna learn stocks today. I was like, who is this? Right. And ever since then, man, it's just been alignment. So for those of you who are here today, maybe this is your alignment. Maybe this is your manifestation. And all of those things, just like Quay said, Quay low-key stole my quote from last night, but it's that people can,
what is it?
You stole it. It was, people can't take away what's in your mind. And you're like,
that's my mom's quote. I said that yesterday.
I stole it from your mom. You're right. But yeah, if you're here tonight, you got your pen and your paper, no one can take away from you what you're about to learn. And that if you lose your job, if you're on unemployment, like this is the goal. Like you can always have it up here enough to make your own money. So yeah, that's a little bit about my story. You're going to hear me teach tomorrow every night. If y'all have questions, please don't be afraid to answer. Okay? Don't be afraid to ask. We will answer it. I promise you. So yeah, just excited to be here.
Yeah, so a little bit about me. I came from a corporate background as well. It's been a life-changing event learning this whole options, stocks, knowledge. Just from what I learned the most is knowledge is key, and the community is also key as well. I appreciate Quay and the whole community benefits got into it. It's literally hours and hours of education every single day, and that's what we're going to provide to you today. And to all the beginners out there, stocks and options, just stocks to market alone, it can be intimidating, but it is not. It is very simple. 1 + 1 is 2. That's it. That's all you have to know, right? We're going to break it down to you in very, very, very simple terms, nothing complicated. And it's always the most difficult, right? To always start something, right? But once you start it, get into the rhythm, it will be great at the end. All right. Welcome all.
Yep. And it becomes
back,
fun.
bro.
It becomes fun. More than anything, it becomes super fun. You'll see everybody on this call spends all day and night. We can't even get them to stop working. They literally are on calls all day, 2, 3 in the morning, because it becomes fun, man. Bucky, what's going on, man? You finally home?
Yeah, I'm home. Hold on. All right, I'm about to go. Can y'all hear me?
Yes, sir.
What's up, everybody? What's going on? First and foremost, y'all need to get y'all energy up real quick, okay? We live in here. We about to learn these stocks.
Hey, Bucky.
What's up, B? Billionaire B, what's up? But everybody, my name is Bucky. I'm one of the admins here at the Stocks and Options Group, man. I'm so excited to be here to help y'all learn about stocks, learn about the stock market. This literally, I joined Cheat Code about 1.5 years ago, and trust me, I knew nothing. I'm exactly where y'all was at 1.5 years ago. I had never traded. I had never bought any shares or stocks or even thought about it. I was on some old, I ain't gonna get into what I was into, but I was into a lot of things before I came. So, when I came, my friend put me on the Cheat Code. I came in, I was a little skeptical at first. When I first got in, the thing that struck me was everybody that looked like me doing stocks. I never thought anybody that looked like me did this. I never was opened up. I was never exposed to it as a kid. They never taught me about it in school. I just didn't think our people did this type of thing. So when I seen Quay and Jehu and the rest of the guys, it was probably about 15 people in a group talking about stocks and then making all this money, I hit my dude that put me in the group like, are they selling drugs in here, bro? Because these dudes is making a lot of money real fast. You know what I'm saying? Like, that's my first, I'm just saying, that's what I first thought. He's like, nah, this is legit. So, I took it serious. But as I started listening even more, I just seen the genuine, the real passion behind this. Like, they were really passionate. Quay was really passionate about what he was teaching. It wasn't just somebody that's just trying to give you information. He was very passionate about it. And I resonate with passion because I'm a very passionate person. As y'all know, I'm loud, I'm kind of a little wild child, but I'm passionate. So that immediately struck me as something that I would want to get with and want to be associated with. So ever since then, I've been hooked. Not gonna lie, I've been hooked. If you would have told me 1.5 years ago I'd be teaching y'all how to do this, I would have told y'all was a lie. Because ain't no way I'm teaching stocks. Not me, not Bucky. I ain't teaching those stocks. You know what I'm saying? But through this great group Cheat Code, I have learned how to navigate with the stock market. And this literally changed my life. Literally. And I tell Quay and Jehu this all the time. This literally changed my life and how I view everything. And I just thank them for that. And I want to let y'all know that, I said it yesterday, if you believe you can do it, you're right. If you believe you can't do it, you're also right. So it's really about a choice, Every day, the billionaire and the beggar get 24 hours, So it's up to you which way you want to choose to go. But it's really up to you. We can give you all the information in the world, but if you don't apply that information, knowledge is power once it's applied. So if you can get all the information you want, but it's about applying the knowledge. And that's what we're here to do. Help you guys learn it and to apply it. And let's get these B's, these billions. Okay.
Amen.
And that's all I got. Yeah.
Amen to that one, Bucky, man. Appreciate that was good. Appreciate you, man. And that's what Bucky's saying is 100% accurate. Everybody, the reason why, the passion behind this, you see everybody on here is passionate about it, is because we don't learn this stuff in school. Like, we live in a capitalist society that's all about money, right? and nobody is there to teach you about it. So we have to figure this stuff out on our own. So those of us who do figure it out, it's on us to go back and give it to the next person. So our motto here is each one, teach one. And so everybody who's on this call, you are honorary cheat code people, cheat code members, cheat code family, and you are expected to teach the next person what you learn here. I don't care who it is. It could be your mama, your daddy, your sister, your cousin, your son, your daughter, anybody. It's your job to take what you learn here and pass it on to the next person. Okay, so that is what we ask of you guys here today. Please have your pens, paper, and any questions that you have. If anything does not make sense to you, please make sure that you ask. We will get it to you. We will answer it and make sure everybody on this call understands this information before we end this program. All right. All right. So without any further ado, we're going to kick it off. I'm gonna go ahead and share my screen from this desktop here. And everybody let me know when you can see the screen. Can you see it?
We can see the screen. Go ahead.
Okay, awesome. All right, cool. All right, let me
don't hold nothing back. Go ahead and let them have it, bro. Let them
have it. We're gonna give it to him, man. We're gonna give it to him. Give me 1 second, we're gonna get going.
I don't see it. Do I have to be on the desktop?
Oh, you can't see it?
Mm-mm.
Nah, you should.
Oh yeah, is it the flyer?
Yeah, I think.
Yeah. The flyer.
Yeah.
All right,
I'm
cool.
like, is it me? Okay, day one,
All
got
right.
you.
All right, day one, introduction to investing, trading, and basics. So today's today's class is going to be a complete introduction. I know everybody's going to be at different levels in some way, shape, or form, but we're going to start from the very, 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 very beginning. What is investing? What is trading? Those two things are not the same thing. They are two different things, and you guys will understand the difference through this particular segment of the class, okay? Let's go ahead and get to the next slide. All right. So what we're going to be covering today, we already did our introductions, we met the cheat code team, and we're going to be covering the importance of investing and trading. We're going to dispel some myths of investing, some myths of trading. We're going to cover trading styles. What are the different types of trading styles? We're going to cover how you find out what type of trader you are. Right? Everybody has different personalities, right? And a large part of your success in trading or investing is going to come with how well you're able to match up what you do as far as trading with your personality, your natural inclinations, or your natural skills. And so we're going to cover, what that means and how you figure that out and match those trader styles to your personality. We're going to cover the investing and trading basics. What are stocks? What are stocks in the first place? What is an exchange? What is an index? Different types of brokers there are. I know somebody had asked about brokerages and what brokerage we typically use. We're going to cover risk and reward, right? So how you manage your risk and reward in general. Get to brokerage accounts, and then we're going to head into the Q&A to make sure everybody got the info. Okay. All right. So, without any further ado, the importance of investing and trading, right? Investing is defined as spending money with the expectation of achieving a profit or material result by putting it into financial plans, shares, or property, or by using it to develop a commercial venture, okay? So investing is where we're putting in money into something. We're gonna let it sit there. We're gonna let it do whatever the purpose is, right? So if it's in real estate, we're gonna put that money into real estate. We're going to allow that real estate to develop. We're going to sell it to make and get our money out of it in some way, shape, or form. Or in the terms of stocks, we're going to invest our capital into a company, and we're going to own a part of that company. And as that company hopefully grows and makes money, we're also going to watch our investments grow, right? So it's a long-term perspective. Trading, on the other hand, is where we're buying and selling goods and services, and compensation is paid or made at the difference between what we bought and what we sold for, okay? So trading essentially is what we're going to be doing in terms of stocks is we're going to be buying and selling a stock on a short period of time, hopefully selling it for more money than we bought it for within that time frame. So if we're going to be a short-term trader, it may only be, a week or so. We're going to buy a stock or buy a company, and we're just going to flip it. We're going to flip that money you know, and hopefully for more that we purchased it for, okay? Now, both of these things are, you know, just as important and just as valuable. There's a big conversation in the investment world of trading versus investing, or, you know, what we call technical analysis versus fundamental analysis. And it's not an either or, right? What we want for everybody in this program is to be both. You want to be just as good of a trader as you are an investor, because sometimes some situations and some circumstances are going to call for one or the other, right? There may be times where trading is where we want to be, and there may be other times where investing is where we're going to be. Or, you know, at the same time, we want to have an investment portfolio that is growing money over time, that we're owning companies over time. But maybe there's, you know, we have $5,000 that we want to turn into 20, or maybe, you know, there's a specific tangible number that we want to make, right? Trading is where that's going to happen. We're going to be flipping our money consistently so that we can grow within a certain amount of time. And then we can take that trading money and move it into long-term investments. Okay. So everything is on time schedules, you know, whether if we're on a short time frame, trading, if we're on a long time frame, we're investing. Some people, again, you know, think investing may be the only way to go. And again, it's not always the case. I know for myself personally, there's been times where I didn't have a whole lot of money, right? And I needed to, you know, pay bills. I needed to make some type of income for myself. And I did that through trading. Trading is a skill set that you learn how to flip that money, you know, over a period of time, okay? So a few myths of trading or investing. The first myth is going to be that investing is too risky, right? Now, as with anything that involves money, there is a risk, okay? I don't look at anything, investing, trading, or anything else as inherently more risky than the other. The only thing that's risky is when you do something without knowledge or without experience, right? Having a job is risky, right? You can turn around tomorrow, your boss can just fire you at will. We saw that happen during 2008. For those of you guys who lived through the recession or were old enough to remember or old enough to experience it, people got laid off left and right. COVID, you know, people lost jobs right here in COVID. And so there's no control over that, right? And so there's risk in anything. Nothing is, when it comes to money, there's always going to be a risk. What allows you to manage that risk is your level of knowledge about whatever that is. Okay, so even people who play poker, there's poker players out there. Poker is a gambling game. It's a you know, inherently a risky thing. It's gambling. However, there are professional poker players out there who have a very you know, high chance of winning money anytime they sit at a particular table. They know how to control their odds. They know how to control their level of risk. That essentially is how we view trading or investing. There's going to be a risk there, but we manage it through educating ourselves, you know, disciplining ourselves, and learning from our experiences and the experiences of those around us to be able to manage that risk and push the odds in our favor. Okay. Myth 2 is going to be, you know, that it's only for the rich. Okay. Investing does not require a lot of money to start. There's many tools and mechanisms to start, such as buying fractional shares. You can start right where you are today. You can invest with $2, $4, $5, $100, $200, whatever it may be. You can start right where you are. You know, I tell the story, not even the story, but, you know, Keo was around. I don't know if Kim was around at this time, but, you know, not too long ago in November timeframe, I took $2,000 in my girlfriend's account just to, you know, let her, you know, I was trying to start her off with a little account or whatever. And at the time we had just made the cheat code album, and I flipped $2,000 into $100,000 in 24 days with, you know, in a very short period of time. You know, not something that is typical, not something that's usual, but it's something that is possible with the right level of knowledge, the right level of experience, and the right level of tools and resources at your disposal, okay? Myth number 3, there's a gamble. You know, we kind of just covered that. Everything is a calculated risk. Myth number 4, that you don't have enough money. You know, again, you can start with whatever capital that you need or whatever capital that you have. You can go ahead and start with that and get into it. What we really want to hone in on is that it's about the skill set. What you want to do here is you want to learn and master the skill set so that whatever you do have, you can multiply. That's the goal, and that's what we do here. Myth number 5, that you need a professional advisor to invest for you. And that is definitely not the case, right? Professional advisors are great. There's nothing wrong with utilizing an advisor, utilizing any type of professional in your space, but it's not necessary in order to grow your portfolio, grow your accounts. The only difference between you and a professional advisor is literally just the information that advisor has over the information that you have. And that information is accessible today with the right application. Okay, so the main thing that you want to have is you want to have the knowledge. You want to have people around you, right, that can support you. You want to have the right tools at your disposal, and you want to have consistency and discipline in this space. You want to consistently, dedicate yourself to learning, whether it's 1 hour a day, 2 hours a day, whatever it may be. That's what you need to master this space. And I promise you, if you apply those things, you will be just fine. Okay. All right. So trading styles. Okay. Those are the myths that we got. Those myths, once we put those out, we understand that those are all not realistic things. What we want to understand is, all right, what are the different trading styles that we have out there, right? The very, very first thing you want to do when, learning any of this type of information is to really identify what your trading style is going to be, what trading skill set you want to master. Day trading, swing trading, and long-term investing are all different skill sets. They're all things that you want to master over a period of time, but you need to have one primary one that's your primary, and the others that you know how to do, so that you're well-rounded as a trader or investor. Okay, and you're going to do that by assessing your personality. But the very first thing you want to know is, what are these trading styles? What is day trading? You may have heard of day trading. I'm sure most everybody in this call has heard of day trading, but maybe don't understand fully what day trading really, really is. Okay. All day trading literally means is, making any type of trade or multiple trades throughout the day. So you're going to open a trade, you're going to buy a stock or buy a options contract, whatever it is that you're trading. You're going to buy it, in the morning or sometime that day, and you're also going to sell it sometime that day. Okay. Day trading is a job, right? And when I say day trading is a job, what I mean is, almost think of it as hunting and gathering, right? When you look at cave people back in the day, or way back when, you had hunters and you had gatherers. Day traders are your hunters. Every day you keep what you kill. What you eat for that day is what you are able to go out there and hunt for yourself, okay? Every day you log in, you open your laptop, you open your computer, you sit at that computer 9:30 in the morning, the market opens, and you're making trades. And whatever profit you're able to buy today, at 11 o'clock and sell at 12 o'clock, or whatever it is that you're able to make for that day, that's what you come home with. And the goal of a day trader is to consistently make some type of profit every single day. If I can log into my computer and I can make $500 every single day, that's quite an income for myself, right? I don't even know what the numbers work out to on that, but it's a good amount of money. Most people don't make $500 a day working, any job, or most jobs, right? But that's the goal of a day trader, is to grow their portfolio consistently every single day, so that they can achieve, some type of income or wealth for themselves. Then you have swing trading. Swing trading is basically buying or selling securities within, or stocks within, a time frame of multiple days to weeks, right? A short swing is typically we're going to hold for less than a week. A medium swing we're going to hold for 1 to 2 weeks at a time. And a long swing is going to be, 2 weeks or more. That's something we're going to hold on to, for a month, 2 months, or whatever it is. And the idea of swing trading is we're really, and we're going to get into this more in technicals, but a swing is basically one price movement. A stock moves, let's say, from $10 to $14 before it comes back down, right? That $10 to $14, that is what we consider a swing. And then when that stock starts to come back from 14 to 12, and then go from 12 to 20, that's another swing from 12 to 20, okay? And we're going to explain that more in detail on the technical side. But the idea of swing trading is we're going to be looking for a particular price movement in a stock, and we're going to play it from the bottom to the top. If you ever heard buy low, sell high, that's the goal of trading in general, but particularly swing trading. We're going to try to buy low and sell right at the peak, okay? And then long-term investing is when you're going to buy a security and hold it for over a year. Now, there is a tangible benefit to long-term investing over day trading when it comes to the tax code, right? And we're not tax professionals, so I'm not going to give you tax advice, right? But the fact of the matter is, with long-term investing, you're going to pay a smaller percentage in capital gains taxes. Okay, so you're going to pay a much, much smaller percentage of your profits on long-term capital gains than you are day trading or swing trading, which is taxed at your income rate, right? So long-term investing, you're going to be buying, you're going to be holding company, you're going to be investing into Apple, and now you are becoming a Apple shareholder, or you're going to be investing into Amazon. You are an Amazon shareholder. That company grows, your money grows. You are now part of that investment strategy over a period of time, and then you're going to sell it sometime long-term down the line. Okay, so those are 3 different types of trading styles. Now, how do you know what type of trader you are in particular? Okay. Whether you're a day trader, swing trader, position trader, or a long-term investor, the way you're going to know that is through personality, okay? For those of you who are, if you are somebody who is fast-paced, you like the fast-paced environment, you like the, high risk, high reward type of things, you have time to sit down and, it's time to sit down and be at a desk from 9:30 to 4 p.m. and you have time to dedicate to that, day trading may just be for you, right? When you are somebody, let's say you're working a 9 to 5 and, you're somebody who's very low risk, right? That day trading may not be your forte. That might not be where you want to be. And what happens a lot of times when people get into the trading space and they have a bad experience, they're typically somebody who comes in and chooses the wrong style for them. They're somebody who is a low-risk person that doesn't like the fast pace, they don't like the adrenaline, and they get into day trading, and then they get their whole portfolio blown to smithereens and all their money's gone, and then they're like, damn, it doesn't work, right? It's like, no, it's not that it doesn't work. That's just not for you. That ain't the right cup of tea for you, okay? Your cup of tea might have been putting a little bit of money in at a time to long-term investing and building that money up over time. And going back to the example I gave you, hunters and gatherers, your gatherers are going to be your long-term investors, right? So those are the folks that they're going to get up every day and they're going to go find a nice bush that got some berries on it, right? They're going to go collect their berries and put them in their basket, and they're going to come back every day and have a little bit more berries than they had the day before, and a little bit more and a little bit more. And then eventually they got a nice big pile of berries that's sitting there, in their stash, and they can just sit there and eat comfortably without having to worry about it. That's your long-term investors. Your hunters, your day traders, again, those are people who are going out every day and they're trying to kill that elephant or that mammoth or whatever you want to call it. They're trying to eat big or the gazelle or whatever it is. Some days you're going to get a gazelle, some days you're going to get an elephant, right? Whatever it is that you can get your hands on is what you're going to get your hands on as a trader. That's how that works, right? The traders are the hunters. And so if you don't have that hunter personality and you're more of a gatherer, don't try to step into, day trade. You at least need to know how to day trade, right? So you can take advantage of it, but find yourself, the right strategy that's for you. And swing traders like myself, we kind of find ourselves somewhere in the middle, right? We like to identify opportunities where stock is down and we want to ride it up for a particular event. And these different trading styles, they break down a little bit further than that, right? But these are just the basics. So we're going to cover those. But as you start to learn more, you'll learn that there's different even types of day traders. There's day traders who look to identify reversal patterns. There's day traders who play earnings reports. There's different types of styles of day trading, swing trading, et cetera, okay? So now we talked about different types of trading there are, but what exactly are we trading? For the purposes of today's call and for the purpose of this 5-day program, we are going to be talking about trading stocks, okay? Trading stocks is the asset class that we're talking about for this particular class. There's different types of asset classes. There's stocks, there's cryptocurrency, there's Forex, which you guys probably heard of, and a lot of you probably are completely scared of, but that's all Forex is. We're talking about currencies. You can trade stocks, which are companies. You can trade cryptocurrencies, which are cryptocurrencies. You can trade Forex, which is currency pairs, or trading the dollar versus the euro, et cetera, et cetera. Or you can even trade commodities like oil, like gold, like silver, like Like we talked about earlier, pork bellies. You can even trade pork bellies. You can trade different types of commodities out there, corn. So as things go into shortages and stuff like that, you can actually trade those things. So those are different asset classes you can trade. Okay, but it's all essentially the same. Whatever you choose, there's the core basis of it is we're going to be looking at those charts and we're going to be analyzing whether it's a good time to buy or not. Okay, so what a stock is a type of investment that represents an ownership share in a company. Okay, we buy stocks thinking that they'll go up in value over time. And we purchase a company stock, we're purchasing a small piece of that company, which is known as a share. Okay, so stocks are the overall asset class, and the company ownership is divided up into a unit known as a share. Okay, there's millions and millions. Some companies have millions of shares, some companies have billions of shares. And when you purchase one of those shares, you essentially become a owner. Now, how big of an owner are you? It may be 1/1,000,000% of an owner, right? Or it may be, 1% of an owner. Depends on how many shares you own of that particular company. But the more shares, the more equity you have in that company, the more ownership rights you have in that company, and the more significant your investment. Okay, investors we purchase stocks obviously thinking they're going to go up in value. If that happens, the company stock increases in value as well. The stock can then be sold for a profit. Okay, there's two ways to primarily make money off of a stock. The first way to make money off of a stock is if the price of that stock goes up during the time that we own it, then we can sell it for more than we paid for it. The second way is through something known as dividends, which Kim is a dividend queen. She loves dividends all the way around. So does Twyla, one of our other fundamental investors and instructors here at Cheat Code. But they love dividends. And when we talk about that gathering personality, that is a complete gathering skill set, right? What that means when we talk about dividends is that company, as being an owner or an investor in that company is going to, every time they make profit, right, for the quarter, a quarter is 3 months in the trading space. Every 3 months, they're going to say, hey, we made $1 billion, right? And of that $1 billion, we're going to pay out X amount to our shareholders as a dividend, right? And so depending on how many shares you own, you are owed a percentage of that payout, and you're going to earn X amount from that dividend. So let's say, they're going to pay out, $1 a share in dividends, and you own 100 shares, you're going to make $100 from that dividend payout over the course of a quarter or a year, depending on what that company's terms are. So the idea there is you want to continuously own more and more shares so that you can get larger and larger and larger payouts. And with dividends, the power of dividends comes in with something called compounding interest. So when you get that dividend payout, let's say you get that $100, you got two options with that $100. You can either go take that $100 and spend it on, shoes, on, bills, on a car payment, on real estate, whatever it is you're going to spend it on, or you could take the $100 and purchase more shares of that company, right? And now that $100 is going to go in, is going to get you X amount more shares of that company. And now that $100 is now going to get you another dividend. And maybe that dividend is only $5 on top of that 100, but now you're going to make $105 next quarter, right? And then you're going to take that $105, you're going to go buy more shares. And the next quarter, you're going to make $112, and so on and so forth. So those dividends are going to consistently compound and compound and compound. And over the course of 5, 10, 15 years, next thing you know, you get checks for $1,000, $2,000, et cetera, et cetera, et cetera. Okay, so it's a very, very powerful concept. And what I want you guys to do, because this is only a 5-day class, we can't cram too much into this program because it's only 5 days. But after this class, write down DRIP, DRIP, right? DRIP is dividend reinvestment portfolios, right, or whatnot. So dividend reinvestment programs is basically how you can set yourself up to consistently reinvest your dividends so that you can consistently make some higher payouts, and just learn about dividend investing in general. For my gatherers out there, if you identify yourself as a long-term investor, this is what you really want to be focusing a lot of your time and energy into. We're going to show you some other really cool ways down the line, for how to even create your own dividend, invest in the stocks, where even if the company doesn't pay a dividend, you can create your own dividend that even pays out more than the regular dividends. That's a very, very powerful strategy. We're going to teach you guys there. Okay. So how do we buy a stock? Okay. How do we buy stock? Stocks are bought and sold via something that's known as a stock exchange. Okay. So stock exchanges are essentially where, you are able to buy and sell. That's going to be your NASDAQ stock exchange, your New York stock exchange, and your American exchange. So anytime you guys, typically when you think of stocks, you see a bunch of people on in like this in a building, and they're all screaming at each other, trying to buy and sell stuff. That's what you typically think of when you think of the stock market, right? It's this really, really busy place that people are doing all that type of stuff, right? That's kind of an old school way. Those are known as exchanges, right? Where typically people were buying and selling live on auction exchanges. Okay, so electronic exchanges are now what we primarily use, like the NASDAQ, where everything is done on a computer. Stocks list themselves on these exchanges, and then you're able to buy and sell their shares. Now, the important thing to know when it comes to exchanges is the difference between these exchanges is going to basically be the quality of the company that you're going to find. Your highest quality companies are going to be found on the NASDAQ. It's going to be primarily your big tech companies, your just more, they're held to higher standards. So that's where you're going to find most of your quality companies are going to be listed on the NASDAQ. The New York Stock Exchange is a very close second. You're going to find some really good companies listed on the New York Stock Exchange as well. Not as stringent, requirements as the NASDAQ, but definitely still a heavy hitter. These are going to be your big players. American Exchange is a legitimate exchange. Sometimes you're going to find decent companies on that, but where you're going to be looking at these down here, where you see OTCBB, OTCQB, OTCQX, or pink sheets, these are going to be typically going to be either your penny stocks, right? Stocks that have very low volume, not a lot of money moving in and out of these companies. They're going to be your foreign stocks, companies who are, listed, they're Chinese companies, they're Indian companies, or things like that. And they are going to list on the OTC market. And because they're not allowed to list on, NASDAQ or whatever it may be, whatever the reason may be, they're going to be on the OTC. Not that you don't have foreign companies on the NASDAQ and things like that. Just typically you're going to find, OTC is going to be mostly those type of companies. Now, when you look at OTC companies, it's not that you cannot invest in OTC companies. If anybody is into, penny stocks or heard of penny stocks and things like that, a lot of your typical, investing gurus or trading gurus, whatever you want to call them, they will down, the penny stock market and things of that nature. And it is a very, very, very risky place to be, inherently risky if you don't know how to trade it and you don't know how to play it. That is a different type of trading and investing that, is a specialized thing. We're not going to really cover it on this call, but I will say that if it's something that you end up being interested in down the line, once you've mastered technicals and fundamentals and you have a full idea, you can definitely look into mastering that aspect of trading. However, do not just get into penny stocks because you think you can't afford to get into regular stocks, okay? Or you're going to make more money somehow because the price of the stock is 1 penny, okay? That 1 penny can go down to a half a penny very quickly, and then you're down 50% of your money, okay? Emotions is it? Yes, Keo, 100%. Cheaper does not equal more value or more, likely to generate an income for yourself, okay? Just because you see a penny or 2 pennies does not mean that that's the place to go. You can make just as much money, if not more, trading stocks, and even more so trading options, which we're going to touch on later on down the line. It's a different thing, but it's a whole world out there where whatever level of capital you have or money that you have, you can start at and you can make just as much, okay? Now, stock indexes are a little bit different or a lot different than stock exchanges, right? A stock index is basically a compilation or a grouping of stocks based on certain characteristics, okay? So something like the Dow Jones Industrial Average is a group of 30 stocks on the market that are designed to reflect the overall industrial performance of America. So we're going to be looking at on this, typically you're going to be looking at your airline companies, your railroad companies, your commodity companies. These are companies that are just, it's overall meant to reflect the economic status of the United States. So when you hear in the morning, you wake up, you turn the news on, you flip on CNN for all my folks over there who are over 35, 40 years old, you turn on CNN and you see some lady on there saying the Dow Jones Industrial Average is down 40 points today, right? Or something like that. That is, they talk about the Dow Jones. The reason why that's an important metric, all right, just shout out, I'm not saying that you got to be old to watch CNN. I'm just saying, in general, those are folks that, watch it. But when you hear that, they say the Dow is down XYZ% or XYZ points. The reason they're using that metric is because the Dow is designed again to give us an idea of the economic health of the United States. Okay, so the Dow is doing well, it's doing really well. That means essentially that the United States is doing well. And that's how they kind of relate to that, okay? Now, the Standard & Poor's 500 index, the S&P 500, this is an index that is made up of 500 companies on the U.S. stock market that, again, similar to the Dow Jones, is designed to give us an idea of how the stock market is doing, right? These are companies, 500 of the best companies they can find across all different industries that is going to tell us how well the stock market is doing. So we say the S&P is up 1 point, the S&P is down 1 point. That's really saying like the stock market as a whole is a little bit different than the Dow Jones, slightly different, okay? But on the S&P 500, you're gonna find all your big companies. You're gonna find some of the best companies on the S&P 500. Now, when you look at the S&P 500, when somebody tells you to invest in a index fund, right? This is where, most people are going to be putting their money. And if you wanted to, instead of going and finding individual companies, and I want to assess that company, and you just want to say, look, I want to put my money somewhere where it's going to grow, right? The S&P 500 is typically where you're going to put that money. Over the course of time, the S&P does not lose. The S&P typically grows at anywhere from 8 to 10%, something like that a year, right? On average, there are going to be times where the market is going to do poorly. Like in 2020, we had a big crash, obviously due to COVID. But again, the market rebounded like nobody's business, right? And you didn't even need to do much of anything. Just investing in the S&P 500 would have made you a bunch of money just in and of itself, okay? Now, the reason why that's important, for those of you out there who want the lowest risk possible in order to make a return on investment and to avoid losing money, with your money in your bank account right now, as it stands, you are losing money. You're losing buying power. You're losing purchasing power. You got $10,000 in there today. Tomorrow, that $10,000 is worth $9,998, right? And the day after that is going to be worth $9,900.95. And so that is called inflation. Now, right now, we are in a highly, highly, highly inflationary environment. That means that the more dollars that are being printed, your dollar is losing value. Anytime you have, more supply of something, it makes, one thing that if I got one pizza and, I got 10 people, it's going to be very valuable. Everybody's hungry. Now, if I got 50 pizzas and I got 10 people, that's more pizza than anybody can eat. Each slice of that pizza is going to be worth a lot less money, right? A lot less to those people. It's a lot less valuable. So when you have a billion people in the country, or however many billions of people in the country, and X amount of billions of dollars, that value is going to be worth something. As you print more dollars, it becomes less and less valuable. So this year alone, the inflation rate, look, y'all a little too giggly over there, Keo and Kim. I can't, let me switch my camera so I'm not looking at y'all. All right. So as the more dollars get circulated, right? This year alone, we printed out a ton of dollars due to COVID, right? COVID, shutdowns happened. We had those stimulus checks go out. I know y'all got that stimulus check, that $600 Trump sent y'all. Y'all said, man, we said, yeah, we were good. $1,000 they sent us, oh, we good, right? But think about it like this. If everybody got $1,000, right, how valuable is $1,000 now? It's a little bit less valuable than it was last year when we didn't have that $1,000, right? And so now when people start to go to spend that $1,000, now, there's more money in circulation and that value becomes less. So this year's 6.5% was the inflation rate. So if you had $1,000 last year, this year is worth 6.5% less. Your salary, if you made $100,000 last year and you made $100,000 this year for your salary, your $100,000 salary is now worth $6,500 less than it was before. So now you're really only making $93,500, right? Because of inflation. So that's how inflation works. So investing into the S&P, if the S&P is growing at a rate of 8 to 10% on average, right, you're going to preserve your buying power and even make more buying power over the course of a period of time. That's why it's important to understand S&P 500, understand index investing if that's what you're into. So that way those berries, continue to compile and you're not losing money. Think of inflation like this. One last kind of example I'm gonna give you. If I give you that berry example, right, of hunters gatherers. If you are a gatherer and you got a bunch of berries here, and you're not investing that into something else, if you got 100 berries, you ain't got 100 days before you're gonna starve, right? Every day you're gonna be eating one of them berries. You got less and less and less berries. Think of that as inflation. Inflation is gonna make your money worth less and less and less and less each day until you go from the point of where gas was 50 cents at one point in the 90s. Now $4 and some change is normal, right? And if you're in California, I feel sorry for you because it's like $6 out there. But that's inflation, okay? The rest of these indexes, they you don't really need to know too much about those, but there are different indexes in general, okay? So with risk and reward, okay, and one of these things we're going to ignore on this end, but risk and reward, this is how the risk and reward matrix typically works, okay? With higher risk typically comes higher reward. With lower risk typically comes lower reward. So like I said, with the index funds being investing into the S&P 500 is very, very low risk. It's about as low risk as you can get on the stock market, right? Because in order for the S&P to go down, the entire market got to go down. And that's 500 companies got to go down damn near at the same time, right? So it's very difficult for that to happen over a sustained period of time. And so there's very low risk there, but also very low reward. You're talking 8 to 10% a year, maybe. That's cool. But, trading stocks, we making 50, 60, 70% a day. Sometimes trading options primarily we trade, but you can also make 20%, 10% a day trading options. And that's trading stocks. And that's very powerful. So it's more, a little bit more risk on that side because you're only dealing with one stock or 2 or 3 stocks at a time versus 500. Your risk is spread out over 500 companies, but your reward is also going to be significantly higher. Okay. So what we like to do, what we do in this space is for every high risk, high reward situation, what we try to do is we try to find off balances, right? We try to find situations in which there's a lower risk with a higher reward. And we do that by identifying imbalances in the marketplace. So for example, if I know that this company is already down 30% for the year, right? It's not all the way at the peak at the top. If I buy at the top, I have a higher risk because, I have a longer way to go down, right? If I've already gone up, chances are I'm gonna be going down at some point in time. My risk is a little bit higher. But if I find a company that is undervalued, it's down 30% on the year, but the company itself is doing tremendously well, because sometimes the company itself can be making money and doing really well, but the stock can be doing poorly, maybe because people aren't interested in that sector of companies, right? Maybe nobody's really interested in buying airline companies right now because of COVID restrictions. People are scared to buy airline companies, right? But the airlines are super, super profitable. I'm not saying that this is the exact case right now, but I'm just saying as an example, let's say that Spirit Airlines is still making a bunch of money. If you look at their balance sheet statements and you look at their numbers, you're like, damn, last quarter, they made 25% more money than they did last quarter, and people are starting to fly again, but yet the stock is still doing really, really bad. This is a time period where there's a lower risk because it's at a level that is not the equivalent to where the company is. The company's doing well, the stock is doing poorly. That's an opportunity to buy that company and wait for the rest of the market to catch up. And going back to the hunter-gatherer ideology, think of it in terms of, everybody going out to go find berries, right? But everybody's on these bushes over here on this side of the farm or wherever we at, right? Everybody's over there picking berries. They fighting over the same berries. And now, one berry over there is now very expensive. You got to fight to the death to get that last berry off that bush, right? But when you go look over behind this little mountain or hill, there's a bunch of berries over here in this bush that nobody's even touching yet. And these berries are bigger and juicier than everybody else's berries, but nobody even know. And eventually what's going to happen is you're going to be eating off of those berries but before everybody else gets there. And then everybody else figures out, oh, damn, let's go look over there where those berries are hiding behind that mountaintop, right? And then they're going to come see you over there eating up all the berries. Like, damn, why you ain't tell us the berries is here? And then they're going to come over there and start eating your berries. And now, your berries become more valuable than everybody else's. And that's how you position yourself to take advantage of imbalances in the marketplace, right? So that's how that works essentially, okay? High risk, high rewards, low risk, low rewards. Overall, and Jen, exactly. Think of it as a sale. Anytime you're looking in the market, right? You're going to see things where people are going to follow hype. The market is an emotional place. Okay, every day people wake up and they make an emotional decision to go buy or sell a company. Okay, so it's psychology. Everything we're looking at in stocks is all psychology. Do people find this company valued right now? Yes. Is the value really because the company is a good company, or is the value because everybody is hype about it, right? So to give you a perfect example, think of something like cryptocurrencies, right? Cryptocurrency is the thing right now. It is a tremendously hype. So any company in the market that announces that they are doing something in cryptocurrency, a lot of times what was happening was these companies would just go up crazy, 40, 50, 60% sometimes, just because they said that they're going to get into cryptocurrency. Does that make them a good company because they said that they're going to be into cryptocurrency? Not necessarily, right? And so that is a time where you have people who are buying hype into these companies. Yeah, the meme stocks. We heard of GameStop, AMC, right? It's a perfect example. Thank you for that, Kim, because that's even a better example. If you guys saw what happened with GameStop and AMC, was GameStop making more money for the quarter? No, not necessarily. Was AMC people rushing to the movies to buy tickets? They still aren't rushing to the movies to go buy tickets like that, right? So why did the company just all of a sudden go crazy? It was all emotional things, people buying hype. So that does not mean that the company itself, so that's an imbalance. That's where you have higher risk and lower reward, right? And so you want to avoid necessarily getting into those companies unless you're just trying to trade it for a quick buck, which is nothing wrong with that. We do it all the time. But that's not something you need to understand before you invest into it, before you trade it, that you understand that you're in a situation that's higher risk with lower reward, but you're going to do it anyway and have your strategy trade. We want to identify low risk, high reward setups, okay? All right. So without going too deep into that end, we'll cover brokerage accounts, okay? Just general brokerage accounts. What a brokerage account is an investment account that allows you to buy and sell a variety of instruments, whether it's stocks, bonds, mutual funds, ETFs. We will cover those in the next class, what stocks, bonds, mutual funds, and ETFs are. These are different asset classes, different types of investments that are all available to you via a stock brokerage account. Actually, I'll touch on it a little bit here real quick since we're here. We already covered what stocks are, okay? Bonds, are a little bit related to stocks, but bonds are essentially, whereas stocks are known as equity, you're buying equity into a company, you're buying ownership into a company. Bonds are buying debt into a company or a government or a municipality, right? Basically, a bond is basically like a IOU that, you're going to loan a company money or a government, a state, or municipality money, and that government or whoever is going to say, hey, we're going to give you 5% a year in exchange for us borrowing your money. And that's what's called a interest rate, right? Or coupon rate. And it's a very safe investment. You buy a bond, you're going to be basically guaranteed that 5% depending on the rating of that bond. There's different ways to rate bonds, but it's very safe and you can, invest in some money that way. Mutual funds and ETFs are basically a collection, very similar to how I explained index funds, where index funds are a group of companies like the S&P 500 is 500 companies, right? A ETF or mutual fund is a group of companies based on a specific category or specific industry. So let's say an ETF, an exchange traded fund is what ETF stands for. Let's say I'm looking at an ETF for tech companies. So in this ETF, this ETF is going to have Apple, Microsoft, NVIDIA, maybe even Tesla or any of these tech companies, right? It's going to own those companies in the ETF. And what's going to happen is the average price action of those companies together. So there's going to say, all right, these companies together at the end of the day went up 4% total. Some companies went up 10%, some went down 6%, some went blah, 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 blah. But the average is 4%. So this tech industry or this tech ETF went up 4% today. And so if I want to invest in a basket of companies instead of individual companies, I don't want to go find Microsoft. I don't want to go find Apple. I just want to own tech companies right now. I can just go buy a tech ETF. If I want to go buy weed companies, but I don't want to dive through, search through all the information for a specific company. I just want to have some exposure to weed companies. I can go buy a weed ETF. And that way, if the entire weed market goes up, chances are my ETF is going to be going up as well. So I can invest in the entire industry all at once without having to go in and buy individual companies on my own, okay? So that's an ETF. Now, it's typically, anytime you have multiple companies or multiple assets within one portfolio, your risk is going to be a little bit less because your risk is going to be spread out amongst the multiple companies. It's called diversification, okay? You want to be diversified to a certain extent. There is a such thing as over diversification, right? Having too many different things in one portfolio, but you do want to have some diversification. You don't want to be all in on tech companies. You don't want to be all in on weed companies. You don't want to be all in on whatever the companies are that you're in. You want to have some diversification because some weeks and some days, some months, tech is going to be up. Some days, some months is going to be down. When one is down, you want one to also be up, right? So you want to balance out your portfolio in a specific kind of way so that you have exposure to different things. Jen, yes, you can do options on ETFs. That is 100%. We do that all the time. It's a great way to get into to ETF investing or trading. All right. So brokerages, back to brokerages. Brokerages is basically just where you're going to purchase your stocks. So if you look at something like a bank account, okay, a bank account is where you're going to go to put your money in. You're going to put your money into a bank account, and that's where it's going to sit. Okay, that's where you go to put your money to save. A brokerage account is an account that you're going to put your money to invest. Okay, so very similar to a brokerage account, you open up very similar way, right? And that's going to allow you to purchase any of these type of asset classes. So if you look at this little picture here, you got REITs, real estate investment trust, which we will cover later on in the class, which is an amazing, amazing investment tool. Stocks, preferred stocks, which is a little bit different than standard common stock. We primarily trade common stock. Preferred stock are basically just stocks that give you a little bit more equity or dividends than common stock. Preferred stock, you're going to be preferred, right? If the company goes bankrupt, you have rights to that company's assets. The common stock company goes bankrupt, you just lose your money. Okay. No, brokerages are not to save money. I said banks are where you go to save money. Brokerages are where you go to invest money. Okay. So anytime you want to invest money, you're going to be opening a brokerage account. Okay. So there's different types of brokerage accounts that you can find you can open. These brokerage accounts are typically tied to a trading platform or known as a trading platform. These are things like Robinhood. Robinhood is a very, very easy account to get started with. It's very user-friendly. It's designed for the average person to just get in and start to understand what's happening in the market and how to trade. Very, very, very user-friendly. TD Ameritrade is a little bit more on the traditional side of brokerage accounts, but it's much more robust. So when you start getting into seriously trading, you don't want to seriously be trading on Robinhood necessarily, or just on Robinhood. but you really want to be on something like TD Ameritrade because you have a lot more options to trade. You can trade, bonds, you can get exposure to all these different things. Whereas in Robinhood, you typically going to only do stocks, ETFs, and options. Okay, but and there's also Webull, there's also E-Trade. There's a bunch of different brokerages out there. You really want to find the platform that is right for you. Like Jenna mentioned earlier in the call, she tried Webull, and Webull just wasn't her cup of tea. Webull is a very powerful platform. I like Webull. I think it is very user-friendly. It may just not have been your cup of tea at the time. I would definitely encourage you to revisit that. But you can also, if it's not really a thing, you go to Robinhood. You get a look and feel for what you're comfortable with. This game is all about comfortability and really being able to manage your emotions and things like that. Okay. So how to open a brokerage account. Okay. So in order to open an online brokerage account, you're going to need to go to the broker's website. Okay. So that could be Robinhood, which is an app. You're going to download the app. It could be TD Ameritrade. It could be E-Trade, whatever that brokerage website is. That's where you want to go in order to open it. Very similar to open an online bank account. You can do it all online for the most part. You may need to upload certain documents like a driver's license or something along those lines. And then once you have that account open, you can transfer money directly from your bank account via ACH or wire, or even other means as well. I know TD Ameritrade, you can actually go into a TD Bank and things like that and deposit money overall. So things that you want to consider are going to be, whether or not you use a particular brokerage. Is there policies on individual retirement accounts? Do they have retirement accounts? Is that important for you? Do they have custodial accounts? Is that important for you, for your kids? Do they have cash accounts or margin accounts? Do they allow you to trade with margin? Most of them do. Is margin important for you? Margin, for those who don't know, margin is basically the ability to borrow money from the brokerage, right? With margin, basically I can take $10 and I can go and say, hey, broker, I'm going to borrow another $10 so that I can invest in this company. So once I do that, now I have $20. I still owe the broker $10, right? But if I double that money, I'm going to go from $20 to $40. I'm going to pay that broker back his $10, and now I'm going to have 30, right? So I went from 10 to 30. If I didn't borrow that broker's money, I would have put 10 in, doubled it to 20, and now I went from 10 to 20, which is cool. But with margin, I was able to go from 10 to 30. Now, on the flip side of that, I can also go from, if I owe that broker $10 and now I lose half my money, now I go from $20 to $10, right? I take his 10, I take my 10, I get $20 worth of stock and I lose 50%. Now I'm down to $10. I owe that broker $10 still. So now I'm down to zero basically. So I lost all my money, okay? And the danger of margin, just to give you guys an idea, right now I'm sitting in Tyson's Corner, Virginia. Okay, my dad, when he back in the tech boom, when tech companies were going hot, there was a lot of money being made in the tech world, right, in the early 2000s and late 90s. It went bust. A lot of people lost a lot of money, and what was happening was a lot of these guys who were, these pretty wealthy guys or whatever it was, they were borrowing tons of money from their brokerages to invest in these tech companies, making money hand over fist. And when it went bust, a lot of them lost everything and even ended up owing their brokers millions of dollars or hundreds of thousands of dollars. And right here in Tyson's Corner, in one of these buildings, some guy actually jumped off of a building and killed himself because he lost so much money and owed so much money to his brokers. He lost his house, lost his car, lost his wife, kids, everything, all that stuff. They all left him, and dude jumped off the building and killed himself. So this game is not one to, you don't want to play around with margin. You don't want to take unnecessary risk. I don't care what is happening in the market. I don't care if you see people making money hand over fist in Tesla or Bitcoin or whatever it is that you're trading. Always maintain your comfortable level of risk. Okay, if you're not comfortable, don't just hop into something just to be greedy because there's money to be made. Always consider the risk and don't over leverage yourself, because there's always, again, yeah, Kim, 100%. There's always going to be another opportunity to make a dollar. Today is Bitcoin, and I don't keep going to Bitcoin. Bitcoin is a great thing, but there's always going to be another GameStop, another AMC, another Tesla, another trade, right? There's always going to be another thing to make money in. okay? So you don't want to over leverage yourself. There's also another story of a kid who early on, what was it, Jay? Like last year, early in 2000, this kid was trading on Robinhood, got into something he just did not know. He was not familiar with options trading. He got into some stuff that he had no idea about, and saw in his account that he had lost, owed the Robinhood $1 million or something like that. And even though it wasn't the case, he just didn't understand what he was investing in, how it worked. And his broker showed him that he owed $1 million, but he didn't wait until the next day where his trade would have cleared and he would have been just fine. But he actually ended up killing himself also because of not really understanding what he was doing. Now, I don't say that to scare you guys and say all this other stuff. What I'm trying to explain to you guys is this game is about emotions and knowledge, managing your emotions and making sure you equip yourself with the knowledge, the tools, and the resources, making sure that, this is a lonely sport. Typically, trading is a lonely sport. Typically, people who are trading is just them and their computer. And when they take a loss, they have nobody to talk to. They have their mama, their wife, their husband. They don't understand it, so they don't talk to them about it. They don't have anybody to really communicate to. Hey, damn, I did this in the market. I should have did this, or have anything like that. That's why it's important to have people around you who are experienced or who know the space, whether it's with us here at Cheat Code, whether it's with people in your local community, whether it's with another trading group, whatever it is, just find you a team to be there with you so that you can bounce ideas off each other and do this together, okay? All right. So brokerages, again, going into things to consider, years of experience and risk tolerance, right? And paper trading account. Paper trading is a great thing. We're going to get into more of that during the technical portion of this program. Paper trading is where you really want to practice. Paper trading is, you're not trading with real money. You're out there trading with fake money. You're going to take $10,000 of fake money. You're going to practice your trades going up and down, and you're going to understand how the game works. Now, me personally, I always recommend people do the paper trading so that you understand the, sorry, y'all, if I keep trying to crack my neck, man. My neck, I slept really bad on my neck is, it's hurting right now. I can't even concentrate with my neck so stiff. But paper trading is where you want to really get your mechanics down, okay? If that's an Advil, we'll do that. But paper trading is where you want to learn what buttons do I click? How do I actually work with this brokerage account? So that way you're not in live trading real money and you don't know how to press sell, where the sell button is on your screen, right? You don't know where all the tools are on the platform. That's what you use paper trading for, okay? What I recommend, and this is me personally from my experience, trading, like I said, is emotional. You don't get the same emotion trading with paper money as you do your real money, right? When you see that real money, you can make $10,000 of paper trading. You be like, oh, I know everything. And then you go put $100 of your own money in, and then you all of a sudden start losing. You're like, oh my God, I don't know what to do. And you freaking out and not paying attention to your trading plan, right? It's almost, it can be a false high sometimes, right? And so what I encourage people to do is take a little bit of your money that once you got the mechanics down, you've paper traded your money, you understand the mechanics, you've practiced what you've learned in your classes, right? You want to take a little bit of money, whatever you're comfortable with, whether it's $5, $10, $20, whatever it is, and you want to trade with that because you're going to get a little bit different of an emotion. And once you learn how to control that emotion, you have to say, okay, I know I'm down 20% right now on my trade, or 5% of my trade, whatever the number is on my trade. But I know my trading strategy. What I learned about my trading strategy, I know why I'm in this trade and what I'm going to do. So maybe I'm going to average down. Maybe I'm going to let my trade play out. And then you get to manage that emotion. Or you're going to say, okay, you know what? I'm going to cut my loss here, and I'm going to go back in with a different, on a different trade. I'm going to learn why my trade went south, right? You manage your emotion. This game, to be a successful trader, I promise you, there is thousands and thousands and thousands of people out there who get into trading every single day. And they find varying levels of success. The ones who find success, the reason why you see Kim up here, Keo up here, Tony, Bucky, and the rest of the team that's up here trading that found success doing this game and do it day in and day out, or Jay who quit his job to do this and all this other type of stuff, right? The reason why we're up here is because we learned early on or at some point in time how to manage the emotions in the game because, things are not going to go your way sometimes. and then things are going to go your way. You're going to make so much money, but if you let that carry you, and you let that greed get a hold of you, you're like, oh, I know everything now. I made all this money. Next thing you know, you're going to be making the worst decision. You're going to be losing a bunch of money. So it's about managing emotions both ways. It's about saying, okay, I made a bunch of money, but now let me go ahead and stick with my trading strategy, not get overconfident, put that money to the side, and keep going with my investment strategy. Now that I know what works, I'm going to keep doing that so I can build me a successful life and portfolio, right? You gotta get away from, being hyper excited when you up and hyper depressed when you're down. You want to be here. You want to be a cold-hearted robot with this game, right? You look at the money like, okay, cool. I made $10,000 a day. That's great. Boom, cool. I'm back at it the next day. I made $5,000 a day. Cool. That's great. Not that you can't be happy for yourself, but you just don't want to get carried away. Okay. All right. So different brokerages. TD Ameritrade. Again, TD Ameritrade is more of a more advanced tool. However, they do have a tremendous amount of educational resources. TD Ameritrade has a ton of educational resources, classes, things like that are available for you. They also have the Thinkorswim mobile app, which is a very, very advanced tool. You can trade futures on it. You can trade stocks on it. So once you get to that level where you now have gotten to this game, you understand how to trade. Now you want to trade futures. You want to trade things like that. Thinkorswim is a great place to do that with TD Ameritrade. They also have a 0 account minimum and free stock and ETF trading commissions. Robinhood is, again, the most user-friendly of all the platforms. It is, it's the design of it is very beautiful. It's very easy to understand, very easy to use. It's not intimidating. They literally designed it to not be intimidating to the average person. And so you will find yourself very, happy and useful on Robinhood, I think. You can also buy some cryptocurrency, even though I don't recommend you to hold your cryptocurrency on Robinhood, for certain reasons. You can do it if you so choose to. But very easy for beginners to understand, and with commission-free trading as well, okay? So I know I said a lot of stuff, and I know I go on tangents sometimes, but I hope you guys got the gist of what I'm saying, right? And you guys got some value out of that. What I want to do right now is open up for Q&A, and so that you guys can ask any questions that you might have, anything that you might want to ask. We will go ahead and answer all of that good stuff for the next, 30 minutes or so. All right. B, let's start with you, man. B, you got any questions for us? Be like, damn.
Well, I was screenshotting every slide.
But we send
over here, gibberish, berries, the field, no questions.
I was wondering the same thing with the berries.
I was in the chat laughing at Kim and Keo. I'm like, y'all quit giggling.
That's them all day, every day, man. I'm trying to tell you.
I got some good little notes. I was screenshotting everything, so I don't have any questions though.
Okay, good.
It's definitely a lot of information, but I'm here. I'm catching on a little bit.
Good. So 5 days we had a mission to try to get a 5-day program is pretty tough. We try to cram as much as we can in here, and that's why this Q&A section is very important. So anybody that I know you guys, there's a lot of stuff at you guys, and I know this is very intro level. So any questions you got, we will make sure that you understand everything and break it down for you. Okay. So I see people ask.
I'm on my phone, so I don't know if anybody else is on their phone, but obviously we will have all this information. But I screenshotted a lot of the slides because little stuff that I wanted to research, I can also do it on my own. I'm like, I'm going to Google that, or I'm going to look more into that, or stuff like that too. So of course, you guys, Cheat Code is going to do a lot of the work, but we have to do our own research in our free time too. Like, we're not going to learn every single thing about stocks in these 5 days. So, he's given us a lot of information. So I screenshot all the slides, and I'm going to be, looking up stuff too.
Yep. That's 100% right. You always want to do your own homework, man, because it's going to, even if you read the same thing somewhere else, it's repetitive, right? It might not click for you right now, and maybe even the way I explain it, maybe it's the way somebody else explains it, maybe the way Keo explains it, or another YouTube video explains it, might click for you. So you always want to do that. And the more you see this stuff, the more you immerse yourself in it, the more it's going to all pull together and make sense. Just like learning a new language, right? We're learning the language of money right now. We're not learning Spanish or or French or whatnot. You know, when you want to learn Spanish, you go to Spain, you immerse yourself in it, right? It's the same thing with this. So anybody's got questions, if moderator, if you can unmute anybody that raises their hand for questions, we'll go ahead and get to you.
Yeah, you guys go ahead and hop in and ask if y'all have any. This is your time.
Hey B, I was gonna tell you, when you're doing your research, you can go on Investopedia.com and you'll get like the good definition of your answer and also a breakdown example on Investopedia.com.
What is it called?
Investopedia. I put it in the chat as well. So Investopedia is kind of like the Webster of investing. So you can go on there and you'll get the exact definition, the exact breakdown. And the reason I like that versus a lot of YouTubes, because I'd rather get it straight from the source. You get it straight, you get the information straight from the source, and then you can come here and ask us the questions and we'll kind of break it down more so for you too in layman's terms.
Yep. Yeah, Investopedia is a great resources for sure. For sure. All right, so look, I see some questions. Okay, go ahead. Who's that?
You know, it's Jen. I'm sorry. You know, I always come with a question.
It's all good, Jen.
Things. All right. For the mature folks who watch CNN, do we really buy into, you know, when they're saying the Dow Jones is up and down, or don't worry about that once we get to learn the technicals? Don't focus on what the media is saying, but focus on the data. Yeah,
no. So what we teach, right? Either way, with Dow Jones up, Dow Jones down, we teach you how to make money both ways. So it's you can make money on a stock going down the same way we make money on a stock going up. So it really doesn't matter to us one way or another whether the stock is up. Actually, most of the time we prefer for stocks to be down, honestly, because then we have better opportunities to buy in. It's a sale, right? If you see a stock that's $100 a day or the Dow Jones today, and it drops, 10%, think of it as a 10% if it's at a good value. If you determine that stock is a good value and you think that you'd be happy to buy it at $100 a day and it drops to drops to $80, that's a sale. So, it doesn't really matter to us. So, and we'll teach you all that in the technical side.
I get that. I get that part. My question is, because when the media gives us information, I'm going to say it's late news, right? Because I guess Wall Street, if they were going to sell off their information, they already told their buddies, and by the time it gets to the main source, or I guess regular folks, is it that FOMO?
Yeah.
Give it the hype.
Yeah, no, I get what you're saying. And
kind of a thing.
No, so I would say this, and that typically is the case, and that's very true. That by the time it gets around to the news, a lot of times it is behind, right? Especially when it comes to things like company announcements. By the time Tesla announces that they done made X amount of sales on their cars, people already knew that, and so they already done bought in, the big money people, right? So you don't want to be reactive. You never want to be reactive to what the news is saying, what the market is saying. It's just, but when they say the Dow Jones is up or down, that's just stating the facts, right? But we're not going to react to it one way or another. It doesn't matter what they say. We have our trading strategy and we go in according to our trading strategy. So we're not going to be reactive. We're going to be proactive. Go ahead.
Jen, there's a saying that says, buy the rumor, sell the news. And kind of what we talk about is looking at kind of when Clay was talking about that high risk, low risk, high reward. Like if you see a Gucci bag on sale, and that Gucci bag is authentic Gucci bag, but it's at $5, you're gonna be like, why is this Gucci bag $5? And you start to research. And when all the stuff kind of lines up and you see the technicals, you see the fundamentals, all that type of stuff, then you're like, let me go ahead and buy until everybody else finds out that Gucci bag is $5. Then guess what? That Gucci bag is gonna be what the normal price of a Gucci bag is, but your $5 now turned into like 2,000, 3,000. See what I'm saying? So yeah, you have a good point though.
Yeah. Okay.
But you have a question in the.
How do I get my money out of my savings account? Because I'm not making any money now. That's just a joke.
That's a fact. True though.
Yeah, I need to get that out of there.
Yeah. No. So I mean, and again, I don't want to. Let me actually just preface that for anybody who's. I know you joking, but I don't want anybody else. Look, your savings is for emergencies, right? You want to still have some money for emergencies, right? You don't want to go all into stocks and things like that. You definitely want to have some money set aside in case something happens. You want to have that money accessible, but determine what that number is, and then determine what the rest of the money is that you can invest in order to to grow your buying power, grow your money. Yeah. I know you know that.
Yeah, I've determined.
All right.
I'm good. Thank you very much. That's it. I'll let others take the floor.
All right.
Hey everyone.
Hello.
So I wanted to talk about the paper trade. I've never heard of that. So I was wondering, how long would you recommend that we do that? And also, where do I even find the option to do that? Is that on another site or through the brokerage account?
Yeah. So that's going to be through brokerage accounts. You have brokerage accounts that have paper trading options on there. So depending on what brokerage account is, you just want to search for the paper trading feature on it, or contact the brokers if you can't find it online. You can just call them up, like TD Ameritrade. You can call up. That's another thing I want to say about brokerages too. Customer service is a big thing. Robinhood doesn't have customer service you can call into. TD Ameritrade has great customer service. You can call in there any time of day and get somebody on the phone who will walk you through step by step whatever it is you need to do. Okay, so definitely your brokerage though.
And so how long would you recommend that we paper trade for before we start investing a small amount? So let's say after the class, if I were to paper trade every day for 5 days, the same amount of the class, do you think it would be a good idea after those 10 days to be kind of practicing on my own for real?
Yeah, so that question is gonna vary from person to person, right? The real answer to that is whenever you feel comfortable, that you have a good understanding, you're gonna know. It's gonna click for you, like, okay, I'm getting the hang of this, right? When you were riding a bike, you started learning how to ride a bike with training wheels, but there came a point in time where you're like, okay, I think I could do this without the training wheels, right? And then you try it out, and then you might need to go back and put the training wheels back on, right? But then at some point, you're going to get a vibe, you're going to get a feel that you're ready to start trading with real money. And that moment is, again, it's just going to be when you master the mechanics of, I know where to go to place my trade, I'm comfortable using this platform, etc. It's not going to be, hey, I'm making money every single day, right? Because it's that making money every single day is completely different when you turn on the real money. Making money, you riding your bike 20 miles down the hill or 20 miles an hour down the hill or whatever with training wheels is a whole different ball game than you riding your bike 20 miles down the hill, without training wheels, right?
Right.
So that's really the answer to that. Is when you feel comfortable that you got the mechanics down, you know how to balance yourself, you know how to pedal that bike, that's kind of where you're going to be at. And then you take the training wheels off, you try with your own money. Even when you try with your own money, though, I would say start with you determining, okay, I know if I lost $100 today, I'm not gonna worry about that $100, right? That number's gonna be different for everybody. Some people might not blink at losing $1,000. Some people might not blink at losing $10. Whatever that number is for you is what you want to start trading with your real money. So that way you're not stressing over it, but it's still enough where you don't want to lose. Nobody wants to lose $50, right? So you still get that emotion, but whatever that number is you're comfortable with, think of that as the cost of education, right?
Okay.
When you go to school, you went to school, and maybe you've taken a college class, maybe you got a PhD, whatever it is you got in school, right? You paid a certain amount of money for that class. Every class you took, you paid $3,000, $4,000, whatever that number is. That money is gone. That money, you ain't never getting that money back. You paid that money for that class, you got the information, that's it. And in the market, the money you put into the market, if you lose that money, take that as your educational learning experience. Okay, I put $200 into this thing, I lost it, but I learned something about, how I trade, right? And so that cost me $200. That's a learning experience, right? That doesn't mean you just quit on it. You know what I'm saying? That means, okay, I paid $200 for learning, I'm gonna come back with another $200, and I'm gonna, I potentially can make that into $400. And now I just got paid $200 to learn this game. And even along those lines, I'm gonna give you the quick example of Bucky. I got to call Bucky on this one because when Bucky came into this game, I distinctly remember Bucky came in. I think he had like $500 or something like that. He started with, and he lost it, right? And then he came back again, and he was gone for like a week or something like that. I ain't seen him around in the Discord for a week, and then he came back again. And he came back with his $500. He started training again. He was like posting profits, He's making money, and I think he might have lost it again, right? But he came right back because he was learning every step of the way. So he paid for his education through that experience. But then I remember the day Bucky made his first $10,000 trading. And then it was like, damn, that's when he started teaching. When he really got the hang of it, he started to teach our beginner classes and things like that. And since then, it's been endless gains for him. So it's going to come a point in time for you where it's going to click for you. You know what I'm saying?
Thank you. That was helpful.
No problem.
You have some questions, Quay, in the chat.
Hey, Quay, just can I add to that real quick?
Yeah, for sure.
Hey, who was the one who asked the question?
That was
Tracy.
Hey, Tracy, what's going on?
Hi.
Yeah, like Quay was saying, when I came in the group, I'm a high risk individual. Period. You know, I came from not gonna speak on what I was into, but we was into some high risk activities. You know what I'm saying? So when I came into this, I kind of took that same mentality that I was running around doing what I was doing into trading, and it was kind of like a culture shock because what happens with people that first start out is they win a lot and they get a false sense of reality and they think they're really better than what they are, and that's what happened to me. I came in the game, I got hot really fast, and I thought I was better than what I was, and I ended up losing. Came back again, doing the same thing, losing. Came back again, losing. But the fact was, every time I was losing, I was learning more and more. Each loss was stepping up my knowledge every day. My knowledge was increasing with every loss that I took. In this game, losses are inevitable. It just is what it is. It's part of it. It comes with the territory. But what the difference is about people that take losses and just give up, or the people that take the losses, they turn those into lessons, and eventually those lessons turn into blessings. So what I would say is this is not a sprint, it's a marathon. You're gonna lose, you're gonna bump your head, you're gonna fall down. But as long as you get up, you can do this. I did this, and I had no knowledge whatsoever. Ask Quay, I knew nothing. I knew absolutely nothing about trading, investing, stocks, anything having to do with that. I learned all of this, things that I know now within a year. I learned it really quickly within, I say about 6 months is when I felt like I was proficient with it. But every day I looked at it as a learning tool. I try to learn something new every day. And it just comes with the territory. Losses happen. It's part of the game. But as long as you can learn from those losses and you can turn those losses into lessons and turn them into blessings, you're going to be okay. If I could do this, y'all can do this. That's all I'm going to say. If y'all can do this stuff and what I came from and what I was dealing with, if I can do this, anybody can do this. And I promise you that. And I'm a living testament of it.
Amen.
I love that.
All right. Like 42 Doug said, you got to go through your L's to get to the M.
That's a fact. Ooh, that's a bar. Jesus. I just caught on the LMNOP.
Bar.
Yeah.
I know it ain't his bar, but it's still a bar. It's still a bar. Man. That's still a bar.
So bar.
Yeah. And even on that note, man, I mean, look, Bucky said it all. You know what I mean? We've all taken massive. I've taken losses that'll make your heart stop. I mean, like literally, I went from in crypto in 2017, went from $5,000 to $230,000, and in one night, playing with that margin, lost 220 of it in one single night. I mean, I went to sleep with 230 something, whatever, 240. I woke up with like 15K. You know what I'm saying? Because I was over leveraged and was, again, being high risk, and took a major loss, one of the biggest losses of my life, and had to start all over from scratch. And, I had to take that lesson with me. And, now when I tell people in the Discord, and Keo, I know you remember this, when people come into the Discord, like Bucky said, they'll get a lot of money to start winning and they'll get overconfident. I'll be like, listen, man, calm down and put something to the side and chill out for a second. And they'll be like, oh no, I got this. And then they'll end up experiencing the same thing. You get overconfident, taking unnecessary risks, and it'll happen every single time. I've watched people come into the day in and day out to the group who've made tons of money, and they no longer around because they got overconfident and took some pain. So
I want to share a quick story as well. And Bucky was there about 2 years ago. Bucky and I played this play that I always do big every single year. It's called the Prime Day, Amazon Prime Day. Yeah,
I remember this.
We are making millions this year, millions. Quote me on that. We that week, there was a 2-week period leading up to it. Bucky was in it as well. Up about 200 grand and got big head. I call that syndrome the big head syndrome. When you make so much money, you know it all. You know everything, right? Got big head, and then God has a way to bring me back down. So put that money, half of the money, into an earnings play, lotto it overnight. And Bucky and I walk out of that one with no money. Yeah, it hurt that one. It was 6 figures loss overnight. So
yep. I remember that day. I remember that 100%. Because I think I even told y'all, I told you in specific not to get so confident about it. But yeah, I mean, it happens, man. But the whole point of the matter is that no matter what, you keep at the game. There's people in this game that make millions of dollars to start out with nothing. Like I say all the time, it doesn't matter what color you are, how smart you are, what your degrees are. It doesn't matter. This game is all about you learning it, mastering it, and getting to the bag. It doesn't matter where you come from, I promise. So anyway, anybody got any other questions we want to touch on before we?
Yes, I have a question.
Yeah, sure. What's going on?
Yes, I wanted to know, because I'm a visual learner, and it takes me to really see it in order to really grasp it. So I wanted to know if at any point during these 5 days we'll actually see you all do any trades or invest in any kind of companies or anything like that. Sure.
I mean, so in the technical aspect, when we get to technical analysis, it's going to be much more. You will actually pull up the chart. That's going to be Bucky and Chrissy, who is not, I don't think she's on the call right now, but they're going to be covering the technical analysis portion. We're going to pull up charts. You're going to see everything live, how it works, things of that nature. It'll all be on that particular screen. And how to take a trade and all that stuff. Obviously, we can't really do any trades live here because it's after market hours. The market closes it opens at 9:30 and closes at 4 p.m. But we do live trade in our community day in and day out where, 1,000 or so people are on those calls. And the team that you see here is trading live that people can join in and actually take the same trades that we take. You can take those trades right along with us and win with us or lose with us sometimes, but most of the time win with us. 8 out of 10 times win with us or whatever. But we will show you live how to, find the companies, how all that stuff works on the 3rd day, I believe it is. We do technical analysis. Okay, same thing on day 4. I think same thing on day 4 too.
You have a question in the chat if you want to answer it. Ready?
What is it?
It says, a question from the YouTube. How much would be a good stock price to purchase? I have a stash account. I see some stock prices that are like $145. Is that a good stock to purchase? And what are fractional shares?
Okay. So first part of that question, it's going to completely depend on the company. And tomorrow with our lovely ladies, Twyla and Kim, they are going to be teaching you guys how to answer that exact question, right? How do I know if $145 is the right price for this company? How do I know if it's the wrong price for this company? How do I know if I'm paying too much or paying too little? That is what we call fundamental analysis. Fundamental analysis is how you know what company is a good company to buy and at what price that company is a good price to buy it. Technical analysis is how do we know when to buy that company, is what we're going to do technical analysis on how to read the charts, okay? So what the question you're asking is called fundamental analysis. It's a fundamental question, and that's going to be based on the company, how much money the company makes, all those good type of things. In regards to the second question, fractional shares is basically there's $145 stock. You don't want to spend $145 on that stock. You want to buy a little piece of that piece of a company. And so let's say you want to spend $50 on that company. They're going to give you a fraction of a share. And so it's basically taking one share. A share is a fraction of a company, and a fractional share is a fraction of that company, of that share, if you will. So it's just a smaller piece. And that's how that works. Okay. How do we join the live trading calls to watch out, buy, sell, trade? You join. So cheat code, we're going to get into on day 4 what cheat code really is, what our community is, what we do, how you can participate, and what the cheat code algo is. But basically, we have our community is a membership community. You come in, you subscribe, and you get all the accesses to all the stuff that we do. Being we have live trading, you hop in with our team, we trade live. We have trading, we actually post our actual trades where you can actually take the trades with us on in our admin trades. We have live classes damn near almost every other day or so in some category or another, whether it's stocks, crypto, forex, real estate, whatever it is. We have live classes weekly, and then we have just a dope community of 16,000 people in our community. And everybody's very, very helpful. Everybody you see here on this call is a reflection of the community. Actually, most of these people actually came from the community itself. I mean, most of these guys were community members. Kim was a community member. Keo, Bucky. Keo was one of our first admins in the group. When we only had like 30 or 40 people in the community as a whole, and now we're 16,000 people strong. And so everybody here was a community member. Tony was the most recent addition, very, very blessed addition. But yeah, so, it's all community folks. And as we teach and you start to, each one teach one, you start to teach more people. And, you feel like you want to actually share that on a larger level. We, bring you on to the instructor team and we keep it moving. So that's how you join that. And on day 4 or 5, you guys are going to get access to a specific channel in our Discord group where we will be there to walk you through things and help you and guide you for 2 months after the 5 days ends. And from there, you can always decide whether you want to join the community or not join the community, whatever it is. It's completely up to you. All we're here to do is provide you the information, provide me the information so that you guys can get on your way, on your journey, whether that's with us, whether it's with someone else, whether it's wherever it is, you get on your journey to making this money, making this generational wealth, and passing it on to others. And on that note, I mentioned generational wealth. Last I'm going to say on that is basically when we talk about generational wealth, and I said this on the VIP call yesterday, generational wealth is informational. What we're doing right now is building generational wealth. What you learn today is never going to leave your brain until you get Alzheimer's or whatsoever you might come across. Knock on wood, you don't get Alzheimer's, but it's going to be in your brain for forever. And you pass that information on. You tell somebody else about an ETF. You tell somebody else about investing or trading. You tell somebody else about whatever it is. You teach a kid that information that gets passed on is going to plant a seed in them. They're going to learn, right? And when you leave this earth, those kids only have the information that you pass on to them. You can leave them $1 million, and if they don't know what to do with it, they're going to blow it, right? So the information of how you train your kids up and what you teach them is how we break this whole cycle of, our community being at the bottom of the totem pole when it comes to this money game, right? That's not where we need to be. And we know education is great. Traditional education is amazing. Like Kim said yesterday, Black women are some of the highest educational group, or the highest education group in the United States. But it does not always translate to income or wealth, right? We can get all the PhDs and all the master's degrees and things like that we can, and it's great. There's nothing wrong with it, but it does not necessarily transfer over into generational wealth. What we learn about money and how our relationship with money and our information, what the skills, the high value skills we learn when it comes to money is how we build generational wealth. That's what the other side of the demographics, that's what they've been doing for forever. Old white men they know the money game. They built the money game. You know what I'm saying? They've been doing the banking and stuff and know all the tips and tricks. Those Donald Trump folks, when he teaches whatever Donald Trump Jr. and Ivanka Trump, what he teaches them, he could die tomorrow with no money. Those kids they're gonna come out all right. They're gonna trust me. They're gonna make their money. They can go back to zero. But just because what they know and how they know how to maneuver with money, they're gonna find themselves right back in the game. Okay, so that's the key part that we've been missing. There's other things like insurance policies and real estate and things like that we obviously want to pass down as well. But the number one thing we want to pass down is information. So with that, I'm gonna end that because I know I'll be ranting. But I'm gonna end that here. I think we are overtime. I think we're supposed to end at 9. Is that right? 9 o'clock? All right, well, y'all got an extra 15 minutes out of us. So yeah, Saturday show, we do YouTube shows and stuff like this. Y'all definitely follow cheatcode.tv on YouTube, and you will definitely tap into all the great shows that we do every day. Really, really dope shows. Okay.
Can I ask one quick little question?
All right, now we don't have me ranting no more. I don't want to rant again because I will do it.
Okay. Well, my thing is, what I've been thinking about is like how do we get the payout? Like if we earn money with the stock, like how do we get it?
Yeah, you just sell it. Yeah.
Wait,
so go ahead.
You said we just what? I didn't hear what you said.
So to get the money to we call this realize. Realize is something called realized and unrealized. Realized gains is when you actually you sell the stock. Let's say you bought in at $10, you went to 20, you made $10. When it's in the stock, when you still have it in the stock before you sell it, it's called unrealized gains. It's on paper, but it's not real yet. Right? Mm-hmm. When you sell that stock, it becomes a realized gain. Now in your brokerage account, you're going to see an extra $10 that wasn't there when you started. And now you got $20 in that account, right? And so now what you're going to do is you can transfer that money to your bank account, right? Because your bank account and your brokerage account are connected, right? And so now that they're connected, you can transfer money from your brokerage account to your bank account. Now you got more cash in your bank. Or you can take your paycheck money into your bank account and invest a certain amount into your brokerage and transfer it back to your brokerage. So that's how you make it real back and forth. Okay, now there's things with taxes and stuff like that you got to pay attention to, and all that stuff is obviously a lot deeper than we got time to get into here. But in order to get that money, to make real money from paper to real cash, you're going to sell it. It's going to be in your brokerage account. From your brokerage account, it's going to show how much cash you got. And then you're going to move that cash to your bank account so that you can, have it tangible. Okay.
All righty. Thank you.
No problem. All right. That's it, man. First class done, man. I hope everybody had a good time. B, I hope you had a good time. I hope that was good for you.
Y'all are amazing.
Appreciate you, B. Appreciate you, man. I'm looking forward to day 2.
We lit, B. All right.
Bucky.
Yeah. Let's get these billions, okay?
Hey, B,
okay.
I thought you was gonna keep up with Bucky, B.
Come on. Hey, look.
No, you
heard me being that lit. I don't know. I'm not even paying attention. I'm over here honed in, like, what? All this information. I'm screenshotting. I'm writing down stuff. My dog over here. I'm like, move. Yeah, but no, this is bomb. This is bomb. Do y'all want to give y'all's Instagrams? I know we're gonna be on here for a few more days, but I would love y'all to also share y'all personal socials with everybody. I don't want them to be blowing y'all's DMs up, but y'all's pages are valuable also.
Yeah, definitely. Y'all put the IGs in the chat, man. So
yeah, put Kim, Keo, Bucky, Quay, all of y'all. Y'all make sure y'all follow them on socials too.
Yep. All right. Actually, I don't know if everybody can everybody see that on YouTube, the chat section here?
No, not the chat section inside.
Hey,
y'all go ahead and drop it.
BUCKYDOLLA. Make sure y'all follow the kid right now. You feel what I'm
saying? At Bucky Dollar.
At Kimber Bumblebee, KIMBER Bumble. I spelled it wrong in the chat. I'm sorry. At KIMBER and then Bumblebee. Y'all can Google how to spell Bumblebee.
Okay, Keo.
We're actually doing a 52-week beginner series, cover both technical and fundamental on my channel with G Code. So I'm excited to share that with everybody. My tag is True Keo Pitch, TRUKEOPICH, as you can see right here.
Awesome. The Immaculate One.
What's going on? You can catch me on at Immaculate_Tony on all social platforms. Immaculate IMMACULATE_Tony TONY. And yeah, I know how to spell that, Kim.
There we go. And I'm at Quay Trades, KWAY.TRADES at Quay.trades. No, not that one, Kim. That's without the dot. It's very critical because there are a bunch of fake pages out there. One thing, if you guys follow me in particular, but any of us, we are not going to DM you for any money. So there's a lot of fake pages out there. They do that type of stuff. They will try to DM you and say stuff like, how's your trading going? And start conversations with you and ask you to send the money. You do not ever pay that any mind. That is not a true page. At Quay.trades is the only one. No underscores, no extra letters, no none of that stuff. Go ahead.
You know, they say you ain't doing something great till they start to make fake pages of you.
No, seriously. Hey, y'all, it's 2022. If somebody's saying cash at me $500 and you're gonna be a millionaire, that's your dumb ass fault. I'm sorry.
Yeah.
I'm trying to keep it professional, but damn, y'all. Come on now.
That's a fact.
Come on now.
You'd be surprised, man. I get DMs all the time. People like, oh, I sent this person X amount of Bitcoin, and I'm like, man,
it's
come
ridiculous.
on, dude.
Y'all got to be smarter than that now.
Yeah.
The worst part is when people follow that fake page. You're like, really?
Yeah. I ain't gonna lie, man. Sometimes like those pages get very they're really good. They copy everything down to a T. They got all these fake followers. They buy fake followers. Sometimes they be catching me. I'm like, damn, is that me? Is that my page? So, I don't know, man. But anyway, all right, guys, we're gonna sign off here. Tomorrow's class is gonna be about fundamental analysis. That's what we're gonna teach you guys how to know what's a good company to invest in. Again, it's gonna be Kim and Twyla, our ladies at Cheat Code. The ladies' lounge is absolutely dope. They are phenomenal instructors, much better than me. I'm a little boring sometimes, I know it, but they definitely more lit. So y'all gonna enjoy tomorrow's class.
Berries the whole time. I was like, yes, berries, hunters.
Hey,
I was getting hungry. I was like,
you feel me? Sometimes
I'm a gatherer.
Decent gatherer.
No, your analogies are great.
All right. So
all right,
we'll
so I'll see
catch
y'all
up with you
tomorrow.
guys. All right. See you guys tomorrow.
Peace, you guys.